been taking too long. Within the next 60 minutes, you're going to know exactly how to navigate Bitcoin mining in 2026. Zero fluff, zero filler. There's a couple things that we want to dive into. We reward people for showing up live. Live attendees today get the Bitcoin mining profitability tool, the full $500 mining tax course curated by Mike, and our interviews, conversations that we had, that most common questions that people have related to Bitcoin mining and taxes. And then in the end, you stay until the end, we're going to give away an S21 plus miner to somebody that is here live. So right now, your odds are looking ridiculously good.
One in a couple hundred.
Yeah. We'll start with the framing. A lot of people misunderstand Bitcoin mining in this sense, where most investors think that the only way to earn Bitcoin is through buying spot, or they believe mining is too technical, or they assume that only institutional public miners can be profitable. And that's just not true, because investors can earn discounted pre-tax Bitcoin through partnering with hosted mining companies and pools such as Simple Mining and NiceHash. And today we're going to show you exactly how in the next 30 minutes. The agenda, what we're covering today: does Bitcoin mining make sense regardless of market conditions? The mining profitability equation, the 2026 macro and mining environment, profitability forecasting model, how miners get paid, tax strategy, S21 plus giveaway, and then we're going to do the Q&A. So just make sure to stay until the end if you want a chance to win the miner. So I'm not sure. Marco's sharing his screen. Yeah. So why have you, let's see. You're following me, Marco?
Yep.
Okay. That's
right. Do you see the screen? The second.
Yeah, you can move to the next one.
Okay.
That's the agenda. Next one. Why 2026 could be the best mining environment in 5 years. We'll jump right into it. So we got to understand what a profitable mining environment looks like. We need to understand what are the variables in the mining profitability equation. I've covered this stuff before, but there's two sets of variables. You have the market conditions and the capital conditions. We'll start with the market conditions. These are independent, so you don't have very much control over these. The difficulty, which changes every 2 weeks. We have the Bitcoin price, the block subsidy, currently 3.125 Bitcoin, and you have transaction fees. Together, those make hash price. And then you have capital conditions, which you have a little bit more control over. That's going to be your power cost, your hash power, your efficiency, and your uptime. So we'll jump into network difficulty. This is the simple mathematical probability of a miner winning the next block. It adjusts automatically based on how many miners are competing on the network. If blocks are being found too fast, difficulty rises. If they're being found too slow, it falls. This chart shows the difficulty at all-time highs. You can see it's actually dropped off a little bit as we've had the price start to negatively decline, and that's caused miners that their margins are too thin that they end up having to unplug. And so that's what's causing difficulty to go down here. But the key thing to understand about profitability is the block subsidy is generally a fixed pie. So the more miners that enter, that slice is going to get smaller. When miners exit, that slice is going to be bigger. That's the key thing to understand here. Next slide. The Bitcoin price is the most intuitive driver of profitability. When you have the Bitcoin to dollar exchange rate rising, every block reward is going to become more valuable in dollar terms. The same amount of Bitcoin mined translates into higher cash flow. When the price falls, the opposite happens. So difficulty determines how much Bitcoin you can earn, while the price determines what that Bitcoin is worth in dollar terms. Next slide. The block subsidy is the programmed issuance schedule baked into Bitcoin's code. At launch, it was 50 Bitcoin per block. Every 210,000 blocks or every 4 years, that number gets cut in half. Today, it's 3.125 Bitcoin, and it's going to keep cutting in half until eventually it reaches zero in 2140. This means that miner revenue may be going down in Bitcoin terms, but historically, the reduction in the new supply has driven price appreciation, which means profitability can increase in dollar terms even if the subsidy is falling. Just logically, you could see in Epoch 1, 50 Bitcoin was worth less than $1,000 versus now you have 3.125 Bitcoin, almost worth $300,000. So in dollar terms, purchasing power in dollar terms, it's actually increasing, not necessarily in purchasing. We have transaction fees. This is the wild card of profitability for miners. It doesn't change how the pie is divided, but it can actually change the size of the pie because it's the one thing that's not tied to subsidy. It can just increase. During periods of high demand for block space, people wanting to send Bitcoin inside of a block, fees have spiked to more than 70% of miner revenue. You can see that this big line over here. But historically, long-term, it's average about 2%. However, over time, it's going to change as the subsidy trends to zero. Fees will eventually become the primary source of miner revenue. Next slide. This brings us to hash price, which bundles all of these together, and it tells you how much revenue a miner can expect to earn per unit of hash power. Looking at this chart, you can see that hash price hit an all-time high in 2017, and it's declined ever since. And you would think, oh, well, is it even still profitable to mine Bitcoin? Yes, it still is. Like in nominal terms, you can see, yes, miners hit $3 per terahash per day. But it's important to understand that the Bitcoin price went up like 2,000% in 2017. So that was partially what drove that increase in hash price. You also have the average mine. The 2017 miners were like top of the line, 10 terahash per second. Today, top of the line machines are like 500 terahash per second. So that's another important thing. The subsidy is 4 times larger, and competition is a fraction of what it was today. This doesn't mean Bitcoin mining isn't profitable anymore. It just means that the industry has matured. It's much more efficient and industrialized. Next slide. We can go through the capital conditions really quick. The most important one would be power costs. For example, if your power cost is zero, you could profitably mine Bitcoin forever. Historically, U.S. electricity rates adjusted for inflation have actually gone down. This might change with the increased demand from AI, high performance computing, setting up these data centers, which could potentially put upward pressure on grid rates for select areas. Just not saying that it would put upward, but we've never changed. At Simple Mining, we've never changed our electricity prices. So one thing to consider, but industrial scale miners typically pay much less than retail users. Cambridge estimates the average industrial mining rate about 5 cents per kilowatt hour compared to 15 to 17 cents for residential users. Then we have hash power, which is just the hash power of your machine. The S23 Hydro has 580 terahash per second. Then you have the Avalon Nano, which is like a little mini home miner, which is 6 terahash per second. We have efficiency, which measures how effectively a mining machine is turning the input of electricity into the output of hash. The lower joules per terahash, the more efficient the machine is at doing that. You can see over the last 12 years, efficiency has dramatically improved, driven by better chip design, smaller nanometer fabrication. This is why new generation hardware can survive lower hash price environments. And ultimately, it's going to be a race to zero because you can't turn zero input joules into a certain output. It's always going to be above zero. So that margin is going to be compressing. We then have uptime, which is the final. Is that thing? Okay.
Bring a little lower.
Okay.
I got intel.
There we go. The final capital condition is going to be uptime, which is just going to measure how many days out of the year your machine's actually online and hashing. Every percentage point matters. If a machine running 95% uptime, your machines are running at 95% uptime versus 85% uptime, you're leaving an entire month of profitability on the table, which is going to slow your payback period. That's the most important thing to understand here. So this brings us to the profitability scale, which on one end, you've got bear market conditions, which would be high power cost, poor efficiency, some downtime. And then the other end, you have bull market conditions, low power cost, good efficiency, high uptime. So mining with Simple Mining, where would you currently fall on the scale? This brings us to the miner revenue comparison. These are current numbers as of today. I just updated this chart. You can see that at 0.075 cents per kilowatt hour, that revenue is certainly greater than cost, because that's at what point you'd want to stop mining is when your cost is greater than revenue. Of course, market conditions and ultimately hash price could get so bad to where the cost, like if Bitcoin went to 20,000 or something like that, then your cost would more than likely be greater than your revenue. And if you were paying 0.075 cents per kilowatt hour, if this were to happen, Simple Mining has a nice feature called the pause period, where you can pause if your machines are on the lower end where it's kind of right on the margin, then you can put them on pause, wait till market conditions improve, and then turn them back on. So all of this may seem like a bleak outlook, but there are some interesting factors to consider. Next slide. Bitcoin hash price. This is Bitcoin hash price index from 2020 onward. You can see even in poor market conditions, you can still accumulate Bitcoin pre-tax, which is an important thing I think a lot of people miss, and potentially reduce your overall tax burden. And Mike's going to touch on this later. But keep in mind, in most cases, you should not just purchase a miner for the tax benefits, because taxes don't necessarily make a bad investment a good one. But if you come to the conclusion that you're getting a good value entry and you're bullish on Bitcoin and hash price, then you're going to have an accelerated payback period. And people buy a lot of things for a write-off and a tax deduction. You could buy a truck, you could buy a vending machine. But the thing with miners is, one, you're getting exposure to Bitcoin, which if you're bullish on Bitcoin, you're going to want to have exposure. Number two, you're getting an ASIC machine, which is an income generating asset that you're going to have on your balance sheet. And three, the entry point, the point at which you buy the miners is important. So historically, what we've seen is the best value that you're going to get when you purchase a machine is when hash price is low or not elevated. It's lower than average, and then you're going to be paying a premium when hash price is elevated. So you can just see based on this chart that anybody who bought machines, and Mike has a story about this in 2021 to 2022, where you can see hash price is very high. You were paying a significant premium on those machines. And part of that was because there was a shortage on ASIC machines, which was driving the price up. But if you bought there and then a year or two later, the value of that machine is much lower. And so you overpaid in terms of premium. It's going to take you a lot longer to hit a payback period. And some people still do. You can still hit a payback period, but it's just going to take you a lot longer. So the point that I'm making is the entry point is very important if you want to hit a payback period as fast as possible. We can jump to the next slide. So this brings up the question, well, if hash price is low, yeah, could be a good time to buy machines, but what if it gets worse? What if market conditions get worse? Where's the bottom at? So let's jump into this. I really like this chart right here. This is the true market mean. And this blue line right here measures the average acquisition price of all active investors who are currently participating in market dynamics. So this does not include, like, if you took the Satoshi coins and old whales who haven't moved, those coins haven't moved in 10 years. We don't care about that because those aren't active market participants and those coins could likely never move. So these are all the active investors in Bitcoin. Their average acquisition cost for Bitcoin is actually around $80,000 per coin. And you can see, funny enough, when we had the massive sell-off a couple of days ago, and the very bottom there, you can see a very clean bounce off of that line. Now, I'm not saying that I'm some technical analysis expert, but that is probably a psychological line for investors who, if the average acquisition cost for the all active investors on Bitcoin is $80,000, then you can see that it bounced off of that pretty clean. The next one to consider would be the next slide, would be the commodity floor value, or the production cost per Bitcoin. And the way that I see this is the intrinsic value of Bitcoin. And this was how Bitcoin actually first got a dollar price. If you took the average amount of electricity required to run a mining machine, which it was a personal computer at the time, you multiplied it by the average electricity cost, and you divided by the number of Bitcoins that computer was generating, then you would get a US dollar price per Bitcoin, which the first one was $1. $1 was equal to 1,309 Bitcoin on the New Liberty Standard Exchange on October of 2009. So we could apply that same logic today using one difficulty, which can estimate the number of hashes required to mine a block. And it can track the global cost structure of the mining industry because it's proportional to the energy consumption and the energy efficiency and reflects on demand. This would be different from the survey that Cambridge did, the electricity consumption index, which estimates the global average for miner electricity costs at about 5 cents, which I mentioned that previously, per kilowatt hour, and at 30 joules per terahash efficiency, which would put the production cost at $80,000, not including overhead. So that aligns with the chart that we just looked at, where the bounce was coming at 80,000. And the other thing to keep in mind here is that there's no way to perfectly know the production cost because there's going to be miners below it and there's going to be miners above it. And we don't know all of the miners on the network that are mining. So it's not a perfect number, but it's good to understand where the floor could potentially be. Next chart. This one is a quantile model that suggests that the price did not hit a true euphoric peak and is currently you can see in the blue area, in a discounted territory. The main takeaway is that Bitcoin is currently undervalued relative to its historical quantile distribution, sitting in the blue discounted zone, which it would suggest potential for upward movement and based on past trends. This is another quick chart we can show is the business cycles, the ISM PMI, which is the Purchasing Managers Index. and it serves as an early signal of shifts in the business cycle, often preceding changes in GDP and other lagging indicators. When the PMI rises above 50, it may signal the start of an economic expansion. Thank you. Prompting traders to increase exposure to cyclical stocks, risk-on assets like Bitcoin. Conversely, if you're reading below 50, it's, you can see that we've actually been below 50 for 7 consecutive months, which would suggest that we've been in a contraction or slowed economic growth. But Bitcoin has gone up over 400% from 2023 to 2026. So all of this to say, a lot of the downside may have already occurred. So is hash price going to go lower? Potentially, it could go lower, but based on the current market conditions, it could be getting near a floor. So jumping to the next chart. Next one. That was one I just covered. Why 2026 could be the best mining environment in 5 years. So we already went over how we can understand what a favorable. I guess we would start with what is a favorable mining environment. That's the first thing to understand. And given we already covered hash price as the number one mining profitability metric, we can see here the standard for what a profitable mining environment is going to be. You can see from April 2019 to September 2019, the shaded red areas, price went up 100%, difficulty went up 68%. October 2020 to May 2022, price went up 230%, difficulty went up 55%. You can see the last section, October 23 to April 24, price went up 100 right before the April 2024 halving, price went up 130% and difficulty went up 48%. These periods are what make mining worth it. These make up 80% of mining profitability. So if you're not mining during these periods of time, then it makes no sense to be mining because you're missing the majority of your ROI is going to come from these shaded red areas. So if you miss these days, it's very difficult to ROI on a mining investment. The same thing applies to Bitcoin, where if you miss the top 10 trading days of each year, then you basically miss all of Bitcoin's annual gains. So the point that I'm making is in order to have a profitable mining investment, you have to be mining in these shaded red areas. And as you can see, we haven't had elevated mining profitability period since October 2023 to April 2024. And the variables that defined that as profitable was the relationship between price and difficulty, which, as I mentioned, you have triple digit increases in price, over 100%, and around 50% increase in difficulty. So it's like a 2-to-1. So if we understand that, we can jump to the next chart. This is an overlay. I found this actually really interesting of the same hash price, but this is showing percent of miner revenue from transaction fees. So the other variable that made mining profitable during those periods of time was, yes, the price and the difficulty, but it was also the transaction fees. You can see those same periods, the overlay of the shaded red overlay is you can see transaction fees hit 21%, 27%, 28%. Right before the 2024 halving, you have 42%, 37%, 67%. So am I saying that we're due for a period of time where transaction fees are going to go up? It could happen. There's no way of really knowing. A lot of this wasn't structural. It was driven by kind of one-off events like everybody minting ordinals and NFTs on Bitcoin, whatever the case might be. But the formula for favorable mining is going to be price growth being greater than difficulty growth, and you have these transaction fee revenue spikes. So what does this mean for 2026? Could 2026 be the best mining environment in 5 years? We'll jump to the next chart. If we use this model for modeling price in 2026, you can see in the middle set for 1 year from now, I'm in the 1 year column on the boxes in the middle of the chart. You can see from 50 to 85 in that percentile, it would put the price of Bitcoin in 2026 from 161,000 to 202,000 roughly. So that would mean price is going to go up 78 to 123% in 2026 based on this model. Does that happen? I can't tell you if that's going to happen or not, but based on this model, it would put price at 78% to 123%. So in difficulty terms, you can jump to the next chart. This is really nice to understand the diminishing growth of difficulty. The main reason for this is ASIC technology is closing in on 1 joule per terahash. In other words, it's a lot easier to go from 150 joules per terahash to 100 than it is to go from 15 joules per terahash to 10. In 2025, we can see that difficulty has actually outpaced price, with price being down 3% and difficulty being up 36%. So that's the period of time where, yeah, man, it's not been great to be mining Bitcoin in the last year, just from a price difficulty perspective. But as I mentioned, that's not what makes it worth it. The periods of time where you have price going up faster than difficulty is the periods of time you want to be plugged in and mining. So periods like this have historically been followed by the opposite, where you have difficulty outpacing price. We're on pace since the halving in April of 2024, difficulty has gone up 75%. So if that trend were to continue, then we would be on pace for a 387% increase in Epoch 5, or a 3% compounding monthly growth rate, which would mean difficulty would increase 40 to 45% in 2026. So we can move to the next chart. If this forecast holds, then price difficulty dynamic could see mirrored conditions to these three historical examples. And as we mentioned, mining during these periods is crucial and makes up for all the bad days. The final factor to consider in the next chart would be the AI high performance computing demand is expected to increase substantially over the next 4 years, 3.5x between 2025 and 2030, which in theory, this could outbid mining projects because they're both going for the same thing, cheap cost of power, and is going to increase competition, hindering difficulty growth. So you have price projected at 178% to 120%, and you have difficulty 45% best case, unless there's some crazy technological breakthrough, but likely it's going to be less than that, around 30%. So you have 30% difficulty growth, you have over 100% price growth. That's the formula for profitable mining based on those shaded red areas. This is why 2026 would be a huge year for miners. And then finally, we can look at this. I have this image here of the mining profitability calculator, which this right here is extremely useful for modeling this. You can throw in this is the inputs page, where you can see that I can throw in the monthly price growth of 5%, the compounding monthly price growth over a period of time. Because if you go a little bit lower, you can see the term in months. So that's, if you were to mine starting based on this December 1st, 2025, and you were to mine for 28 months, that's up until the halving in 2028. And then you can factor in your tax depreciation percentage in the first year, your tax rate. You can factor in the price of your units, how much you're paying, how much hash rate you're getting. And then the hash price page does the backend calculations for you. You don't have to measure that. But then the forecasting page is going to show you a month by month breakdown of what the profitability is going to look like. And then you're going to have the mining versus buying page on the last one. And that one is going, and this actually, in this specific example, if you have difficulty growing at 2% per month and you have price growing at 5% per month, and you're mining for 28 months, mining actually outperforms just a spot buy. If you just do the mine and hold strategy by at 28% in Bitcoin terms. Now we don't have enough time on this. I want to be respectful of everybody's time for me to do a full breakdown on this model. But I spent hundreds of hours on this, and it's extremely useful. And everybody here who attend is going to I'm going to send them a link to be able to mess around, plug in the numbers, and see what things will look like based on what you expect. But it's extremely valuable, and you should definitely take a look at it. So with that, I think unless you have anything to say, Mike.
I need a copy of this calculator, please.
Yeah.
You've been holding out way too long, and I don't have a copy of this, and I'm starting to wonder why, because this is an amazing piece of Excel modeling that you've done. I can't wait to jump in there and mess around with it. But like you said, everybody's going to get their chance for attending today. So look forward to working with that model.
Yeah. And then I think we got Marco. You're up next. And Marco's going to talk about, if we go back to the original agenda, how miners are getting paid and how the NiceHash technology helps you facilitate that.
I am a user of NiceHash. I just want to say, like, they have a great platform, and you get to see a sneak peek of what they do. And the app that they have where you can review your stats and statistics about your mining rigs is fantastic. I've been using them for quite some time now. But let's segue over to Marco and NiceHash.
Thank you. Billy, first of all, great job with the presentation. You got me thinking if I should invest in a couple of machines with you guys. So maybe we should talk after this.
Yeah.
Hello everyone from my side. My name is Marco Tarman. I'm lead mining manager at NiceHash. And today I'm going to be talking as said before, about what NiceHash is and a little bit about mining pools. First, a little bit about NiceHash. NiceHash has been around for 11 years now. We were established in Europe, Slovenia, but in 2024 we moved our company to Switzerland, where we are proud to say that we are fully audited and regulated, and probably one of the most, if not the most, compliant pool out there. But I want to start off how exactly mining works. So we've got a blockchain, so Bitcoin blockchain, and miners on the other side for mining. And this is how mining without a mining pool looks like. So let's say we have 6 miners with approximately the same amount of hash rate mining directly on the blockchain. They will confirm each of the miner will confirm every sixth block that's being confirmed. So they will also receive about 1/6 of the total daily reward issued from the blockchain. It's okay if there's 6 miners, but if we keep adding these miners, if we reach thousands of miners, 100,000s, then we can clearly see that one miner will receive a reward every few months, maybe every few years. And because they have to pay for the electricity, this is not a very good business model, because they are pretty much based on the luck factor, how often they will get paid. And here comes the pool. What pool does is basically pools the hash rate of multiple miners. And in this case, we still have 6 miners, but 3 of them decided to join or to group pool their hash rate together and act as a single entity on the blockchain. So all of a sudden, each miner still receives 1/6 of the reward, but the miners that are pulling the hash rate together receive more frequent payouts, but the amounts are smaller. So at the end of the day, at the end of the month, each of the miners still receives the same amount, whereas the solo miners receive only, let's say, 30 payouts, whereas the smaller miners in the group will receive, let's say, 60 or 90 payouts. So they will have way more frequent payouts per month or per year. But what's the problem? As Billy explained before, pay rates are normally based on blockchain difficulty. So how many miners are mining Bitcoin, and the block reward. And as we know, the block reward is always lowering, it's always halving. Right now it's at 3.125 Bitcoins per block. So in other words, will the size of the pie remains constant for the 4-year epoch, of course, more and more miners are competing for the same share, because the difficulty is normally growing, as Billy said, about 3% per month. That reward is split among more and more miners. And that's where NiceHash comes in, because, as we like to say, NiceHash is more than a mining pool. Technically, we are not a mining pool, we're a spot on-demand deliverable hash rate marketplace. What that means is that everything is happening in spot, so in real time. A buyer can place the order for the hash rate in real time. They can manipulate the price of the order in real time. They can change the amount of hash rate they want. They can also cancel the order anytime they want. And at the same time, the seller can connect or disconnect the machines whenever they want. There's no obligation to fulfill an order or something like that. Secondly, it's on demand. It means that a buyer can place the order whenever they want, and they can cancel it whenever they want. Not as an ordinary cloud marketplace where you can buy, let's say, 100 terahash for 1 month, you pay in advance, and that's it. On NiceHash, you place the order and then you pay as you go. So if you spend half of the balance on the order, you receive the other half back. And lastly, it's a deliverable hash rate marketplace, which means that your hash rate, the bot hash rate, is actually delivered to your end destination. So if you want to send hash rate to Luxor, to Endpool, you are actually the owner of that hash rate as long as you're paying for it. This is approximately how NiceHash works. It's a simplification of the process. So on the left side, we've got the buyer. I'm not sure why the resolution is slightly bad, but I hope you can see it well. On the left side, we've got the buyer who deposits his funds on the NiceHash platform and he places the order. As he pays for the order, the miners start sending the hash rate through the platform to the other side, to the pool, so a pool of the buyer's choosing, and then the buyer receives the reward from the pool. Essentially, a buyer is a miner from the pool's perspective. The buyer has to pay for each and every share in real time. So a buyer doesn't pay anything in advance, or the miner produces hash rate in advance. Everything is happening in real time, and a miner is actually getting paid for each and every share that he submits. But why would someone pay for hash rate, and why would they pay premium for it? This is how the NiceHash looks like. Again, simplified. We've got the sellers on the left side who are producing the hash rate, sending it to the marketplace, and on the marketplace, the buyers are placing bid orders or orders. First of all, the most obvious case is arbitrage buyer, and essentially these buyers are trying to buy the hash rate at the lower price, let's say at 2% under FPS index, and sell it on a pool buy for the FPS index or whatever the pools are paying for that amount of hash rate. And then they make a small percentage on that trade, on the volume. Then we have solo miners who are placing solo orders or just normal orders and sending the hash rate to a solo pool. Essentially, they can buy 1 exahash, 5 exahashes for 10 minutes, for an hour. And if the probability is high enough, if they are lucky enough, they can confirm a block by themselves by simply buying a few hours worth of hash rate. So in other words, they could be spending $1,000 and getting $3,000 worth of Bitcoin back. Then we have speculators who are placing the orders in order to buy or to acquire coins that aren't available on any major exchanges. So it's their way of buying a newly listed coin, a newly launched coin. We also have pools who are buying the hash rate to stress test their servers. And one of my favorites is a hosting provider such as Simple Mining can buy the hash rate and deliver it to their clients in a force majeure event. For example, if the machines break down, if there's a flood or a fire or whatever happening, they can buy the hash rate off of NiceHash and deliver it to its client in order to maintain the uptime they promised. Just one of the example. And the beautiful thing is that all of these buyers have to compete against each other, because the main rule on the marketplace is that the highest paying buyer gets the hash rate first, or has the priority for the available hash rate. And if the arbitrage traders are always willing to pay, let's say 1 or 2% under FPPS, then solo miners don't care that much about the price. They are easily willing to pay 10% more for the hash rate in order to have that luck, that probability of confirming a block, which they otherwise wouldn't have. So in this case, that would mean spending $1,000 or $1,100 for hash rate, which isn't much of a difference. But if you've got a lot of solo miners, a lot of solo buyers, this adds up, and the average price of these all buyers is taken and paid out to all of the sellers. So everything is fair for the supply side. Of course, then the hash rate is being redirected to a pool, maybe even different blockchains such as Bitcoin Cash or some other coins, but still the pay rates or the payments are always in Bitcoin because the medium of exchange on NiceHash is Bitcoin. How the order placing looks like, on the right side, on bottom part, you can see the order book where the highest paying buyer is paying 0.45 Bitcoins per exahash per day. That's about 45 Satoshis per terahash. And as you know, the current hash price is at about, if I remember correctly, 0.42 Bitcoins per exahash. So these guys are paying about 10% premium compared to what the blockchain is paying. And of course, the prices drop as we go lower on the order book, but the average is taken, and the average is normally higher than on FPS pools. Anyway, to place upon the order, the buyer first has to deposit Bitcoins to NiceHash. Then they decide where they want to send the hash rate. So for example, to btc.com pool. Then they must set the price. So for example, 0.41 Bitcoins per exahash per day. They say how much hash rate they want. So this will be the maximum amount of hash rate they will get, because nobody guarantees that they will receive the hash rate and the amount of Bitcoins they want to spend. Of course, if the price is not high enough, they will not get the hash rate, and they will have to increase the amount, the price, or they will have to wait until more hash rate is connected. And the main point is that the bot hash rate is always delivered to the pool of the client's choosing. This is a recently launched view, first of its kind. It's a trade view of hash rate, where you can clearly see the price movement of hash rate on our marketplace. So this is something that we implemented to bring hash rate trading closer to people who are not familiar with it. And the differences between NiceHash and pools is that on NiceHash you're selling the hash rate. On FPS pools you're normally liquidating the hash rate on the blockchain. On NiceHash, the buyers take all the risk of getting the reward or not. So the buyers have to pay for the bot hash rate. And if, for example, a solo miner doesn't get the reward, he still has to pay for each and every share he buys. Whereas on the pool side, a single entity takes the risk, and if the pool has a very bad pool luck, they might not get the Bitcoins from the blockchain and even default. We've seen similar cases with Pega pool a few years back. So this is a risk on that side. Also on NiceHash, the most important part is that pay rate is based on dynamic market conditions. This means where the people are making the demand, whereas on PPS pools, the pay rate is based on daily Bitcoin emission and network difficulty. So it's blockchain based, and it normally cannot be influenced over by anyone but the competition. So NiceHash is the only secondary marketplace for your hash rate. It's the only place where someone might be willing to pay more for your hash rate. I'm talking about spot marketplaces. It's a place where demand is set by people and not by blockchain, as already mentioned. Here's an example of the last 6 months. You can clearly see NiceHash premiums, the orange line, versus the FPS pay rates, the 0% line, where the highest spike was even at around 6%. A different view of the same data. All of the data is available publicly on NiceHash website and on hashrateindex.com. And for the last 180 days, we can see that the premium was pretty much 0.6%. And as a matter of fact, just right now, as we're talking, the premiums are around 1.5%. So there's a big upside potential for all of the miners on NiceHash right now. Not to mention the pool fees. Normal or like default FBS pool fee ranges from 2.5 to 4%, whereas on NiceHash we offer default fee of 2%. And if you're a simple mining client, you can get a very, and I mean very good discount by using their service and our. So if you're not using simple mining yet, maybe that's also a good reason to start using them over their competitors. This is how normally people ask like how does it look to sell the hash rate, but the user experience is identical to using any other mining pool. So we've got the stratum address, the worker name, the password, and that's it. If you want, you can get a detailed connection guide by scanning the QR code on the right side. This is how the dashboard looks like. So you've got the miners connected, all the basic information, and I would also argue that there's even more information available on our platform than on other mining pools. You've got the basic stuff like average speeds, profitability, unpaid amounts, etc. Of course, you can also track the speeds, so accepted and rejected speeds globally for the whole, all of your machines or per device. So both options are possible. And we also offer the basics or even more advanced history stats. For each day, you can get the average speed, average rejects, total earnings, output, and uptime. You can also export these for accounting reasons. This is how the wallet tab looks like, because when you create an account on NiceHash, you also receive a Bitcoin wallet address, and NiceHash acts as a custodian of your Bitcoins. And so you can deposit or withdraw the funds from it. And I'm quite proud that just a few weeks back, we launched a new feature called Virgin Coins, where you can withdraw Virgin Bitcoins directly from the platform instead of receiving regular Bitcoins. We also support Lightning Network, so you can receive Bitcoins instantly and pretty much free of charge for transaction fees. You can also automate all of these withdrawals through our systems, so you get paid directly to your cold storage, to your exchange every day or every few days. That's it from my side. Thank you for your attention. If you want to connect with me, you can find my Telegram on the right side and LinkedIn on the left side. Thank you.
Marco. And then to wrap it up, you can jump to the next slide. We got Mike to cover a couple of the tax strategies.
Good afternoon, everybody. Mike LaLuna from LCL Tax, LaLuna Cohen Lampert, based out of New York, about 40 minutes from Manhattan. First of all, absolutely brilliant presentation, guys. There's no wonder why you guys are the thought leaders in both of your companies and are just tremendous in the space. Your expertise is phenomenal, and it's great to be working alongside you today on this webinar. So let's get into some tax strategy and why we want to focus on protecting this sacred asset that is Bitcoin and the machines that are expensive, right? These are high-powered computers. So number one, forming a business entity around your mining portfolio is really important, not only for proper reporting to IRS, but for asset protection. Now, most attorneys would certainly advise you of the same level of protection that I'm talking about today. I am not an attorney. I am a CPA. I do advise on these things with our clients. Everybody's situation is different. So somebody that mines on their own might think an LLC is great. They may think an S Corp is great. They may think a C Corporation is great. Everybody should have those consulting discussions with their CPA to go through reasons why one might be better than the other, because it's not a blanket one fits everybody. It depends on the situation. It depends on the ownership structure. It depends on how you want to leave a legacy behind to your family. But definitely having a business around this is super important. So one of the most popular types of entities would be the S corporation. And when we do form entities, we do form them with the intent of registering them in the state of Iowa, if that's where the machines are being are doing the work out of, right? So if you have machines in certain states, you're required to report the income in the state that the machine is located in. So just because you're a Florida resident and you've got a Florida LLC or an S corp, doesn't mean you get to skip out on state income taxes, because those units are located, if you're working with Simple Mining, in the state of Iowa. So keep that in mind. And if you haven't registered or opened your business to conduct activity in the state of Iowa, you are definitely going to want to do that. And it's a simple form. You can definitely do it on your own if you wanted to. We've handled that for our clients as well. So just reach out if you have any questions in that regard. Let's get into the aspect of how we report income from mining. Every day you're mining from different mining pools. Whatever the spot price of Bitcoin is, that's the price you recognize your mining reward income at. Obviously, there's a little bit of a conversion. If you're mining 0.0025 Bitcoin in a day and Bitcoin's at 92,000, it's a fraction of that price, right? But that establishes, number one, your revenue that you have to report for the year, right? There's spreadsheets that you can pull out of NiceHash. NiceHash actually has a great reporting mechanism. You can pull the reports from NiceHash and you can look at the income for the entire year. So we recommend to our clients that are working with us through our bookkeeping program that we do this on a monthly basis. We can do it on an annual basis. I would just run the report January 1st, January 2nd, and do it for the entire year of 2025. And that report is basically your revenue for the year. It also establishes your cost basis, which is the next most important thing, because when we go to sell our Bitcoin or spend it, we have a transaction, which is a taxable transaction. Well, we know our cost basis is what we mined it at. And then the new determination on whether we have a capital gain or a capital loss is predicated on what price we transacted at. What was the price of Bitcoin at that time? So in some cases, you could have a capital gain and pay taxes on the ordinary income from mining in the same year. That definitely can happen. And if it's short term, then it is treated as regular ordinary income. If we hold it for over 1 year, then you get the long-term preferential tax treatment, which can be 10, 15, or 20% cap gains treatment. So there's two different distinctions between tax on our mining income. And when we sell, that's triggers the next set of taxation. Normal operating expenses, obviously we have our hosting and electricity costs, any insurance that you purchase on your machines, any invoices that you pay, or any repairs that you have to spend money on to fix the machines. Certainly the most obvious of costs that get deducted. The biggest one of all of them is the bonus depreciation, which these machines qualify for. So the One Big Beautiful Bill allows for 100% expensing of computers. And that's what these are. So they qualify for 100% bonus depreciation, which means if you spend $5,000 on a computer to mine Bitcoin, you get a $5,000 deduction on your taxes for bonus depreciation. It's a election that is made when somebody is preparing that tax return. For us, we put the asset onto the tax return. If you've got one, great. If you've got 500, it's a lot of work for us. So the more units you have, the more time involved in putting each asset on. And each one should be on the tax return individually, because if you later decide to sell that machine, we need to know what machine was sold. We look it up by serial number and we dispose of that asset through a sale option inside of our tax program, which allows us to then capture whether we have a capital gain or a loss on the sale of the equipment. So it's very important that the asset is tracked appropriately, and that is something that we work on with our clients. If you go to conferences and you you attend the Vegas Bitcoin conference, one of the biggest ones in the world. There's one actually coming up in Abu Dhabi next week. These are conferences that you can certainly deduct an expense on your tax return. It's part of your business, right? You're going to a conference, you're networking, you're learning more, you're meeting vendors, you're negotiating with different partners. So definitely look to deduct that. If you purchase a laptop to manage your portfolio of equipment, certainly a qualified expense. If we get into home office and vehicles, I don't want to be a pig. I don't recommend taking those types of deductions inside of my mining business. It generally doesn't apply. You're not traveling and moving mining machines from one state to another. So just be careful when it comes to those types of things. A small area subscriptions, if you pay for any newsletters or subscriptions that are in the area of digital assets and mining, certainly consider those deductions as well. So let's see what else. The importance of in-service deadline. What do we mean by that, Billy?
That if they want to reduce their tax burden.
Oh, yes. So 12/31 is quickly approaching, and we want to make sure the machines are live and hashing before the end of the year in order to say that, yes, I was up and running in 2025. That's what makes the deduction for the depreciation count. It's when the assets are placed in service. So if you're looking to get involved with mining and you're thinking about it and you're like, oh, I want this deduction for 2025, let me wait till December 25th. Guess what? You're going to have a problem because your machines most likely need a few weeks longer to get up and running and online before the end of the year. So don't wait if you're looking to get in before the end of the year. Otherwise, 2026, the rules still apply for bonus depreciation, and they will be there for the foreseeable future unless new law comes into place in the future, which under the current administration, we should be good for right now. But take advantage of these opportunities while we can here.
Yeah. I think that we got a lot of stuff in the chat for Q&A. Thank you, Mike. Appreciate it. He's got a wealth of knowledge and expertise when it comes to taxes and Bitcoin mining. And we have you can move to the next slide, Marco. We have a dedicated section on our website. You can see down there, simplemining.io/taxes. And that is where you can go to if you want to book a call with Mike or you just have any general questions. A lot of what's in the Bitcoin mining tax course, there's a PDF that's going to have a lot of information, as well as the 3 interviews that we've done are going to cover 99% of your situation. Now, there's specific cases. Everybody is going to have a different tax situation mostly. So that's where having a conversation with Mike and getting custom tailored solution to your exact situation will be helpful. But ultimately, you're considering all of this. An investor has 2 paths. You have path A, which would be to choose 0 mining exposure and taking the risk of potentially FOMOing in when hash price is elevated and everybody's saying, oh, mining is the best. I'm making so much money right now. Markets flip to the upside and everybody, like, that's what the sentiment's going to be. And like, just from my perspective, we get really busy when Bitcoin's up, whatever, 20% in a month. Everybody's like, hey, I want to start mining. I want to set up a mining investment. Not necessarily that's bad, but you're going to have the fastest payback period if you buy when you get a good value buy in terms of hash price. When everybody's like, oh, we know Bitcoin's not going to 0. We know that the floor is going to be somewhere around 70 to 80,000. And if that's right when you set up your machine and 2026 ends up being a really good year for hash price, then you're going to get a fast ROI and you're not going to be buying the top when everybody in the world wants to start mining Bitcoin. Then path B would be allocating to mining when sentiment is broadly negative, which is generally right now, I would say sentiment is broad. Like, you can look at the fear of greed index. Everybody's fearful. They think that Bitcoin's going to 0. They think that all of these terrible things are going to happen. And it's almost always when sentiment is negative, it's not as bad as people think it's going to be. And gaining exposure to discounted Bitcoin, all the benefits that are associated with mining, gaining exposure to discounted Bitcoin, you have exposure to the ASIC market, you have an income generating asset on your balance sheet, the tax strategies, it's exposure to transaction fees. When you're buying spot, you pay a transaction fee to buy the spot. Whereas miners, they are the benefactor of those spot buyers that are trying to buy that Bitcoin and get it sent to their address, then the miners are benefiting because they're executing that final settlement. And so you're on the opposite side of the equation there. You have exposure to the price difficulty dynamic that I've mentioned. You also have the energy arbitrage. So if you're interested in mining Bitcoin through Simple Mining, you can visit our website, simplemining.io/start to start mining in 4 steps. You got the link right there. I'll send this deck to everybody. So if they want to go, they have a certain chart they want to look at, and then they want to go over here, you'll have access to that. We have the dedicated tax page. And obviously, for setting up a pool, you have nicehash.com to learn more about what they do. And we have a lot of, on our end, we have a lot of educational resources to help you set up your wallet, set up your address, get it programmed with NiceHash, get it set up on your dashboard. So if you have any questions on that, then you can go there as well. And then one final thing, if you have any specific questions or you want to walk through on the mining profitability calculator, there's a lot in there. There's like hundreds of formulas on the back end. And so if you don't want to mess something up, or if you're trying to figure out how to model for your specific situation, you can send me an email, billy@simplemining.io. You can book a call with me and I'll show you how to use it based on your specific circumstances. But just for the sake of time, we don't have time to do that right now. But then we can jump to the next slide for what everybody is waiting for, which is the S21 Plus giveaway. So I am about to pull up.
Wait, before we do that, let's give them some details. What does this machine do? What's it earning today? Let's talk through this right now.
Okay. We'll pull up. If you want to go, anybody can go to our website right now, simplemining.io. You go over to more, you go to compare miner revenue. So I use this chart basically every day because it gives me a pulse on the profitability of various machines. So the machine that we're talking about here is the S21 Plus 225. You can scroll down the list and you can see it's a couple machines down the list. Right now, this machine is currently consuming 3,750 watts. It's 225 terahash. So that means it's 16.67 watts per terahash. The daily cost on this machine, electricity-wise, overhead to run it with Simple Mining, is going to be $7.20 for electricity.
And that's pretty static, right?
That's not going to change. We've never raised our rates since inception, and we don't plan on any time in the future raising our rates. The revenue is going to be $8.86. So right now, this machine is making, one of these machines is making $1.66 per day profit. That's a $93,000 Bitcoin price, the pretty low hash price, and that's at 8 cents per kilowatt hour, which is what mining giveaways are at. So you're making $1.66 per day, which you have anything?
No, just I feel like KPMG auditing the lottery right now. So we are running a random number generator. We have a list of all the participants from today. And I am watching. I'm gonna run it right now. Watching it happen live right here.
Okay. Got number 283, which is, we got Nick Robinson. Nick Robinson. Is he here?
Robinson. R-O. Yeah.
You got to drop something in the chat. You got to respond. Who's Nick Robinson?
Wait, do they have to be live?
Here.
Oh, he's there.
Here.
Contastic. Congratulations.
You are the winner of the S21 Plus.
You got some Bitcoins coming your way.
Yeah. Congrats.
Everybody's going nuts right now.
That's awesome. So
he's holy cow. He says, holy cow. Yeah, you just won an S21 Plus.
That's so cool.
Congratulations.
Welcome to the Bitcoin world. Maybe you're mining, maybe you're not, but welcome to the journey.
You got a lot to learn.
It's pretty exciting. The best thing about it for me personally, I got involved a few years ago, dollar cost averaging without having to worry about the price. Every day, my machines are buying Bitcoin basically, and I don't care what the price is because I know in the long term, I'm holding on to that Bitcoin. And when I'm ready, then I will deal with selling it or borrowing against it, which is another strategy we could talk about in the future if you're one of our clients. Yeah. You know, the beauty of working with people in the space is we get to see a lot of different strategies. I work with clients all over the country, and everybody's got different things going on in their own businesses. And we're working with Simple Mining, NiceHash, understanding the latest and greatest things that are happening. We learn a few things here and there, and we get to chat through that with our clients on a lot of our consultation calls. And borrowing against Bitcoin could be very interesting. We got to be careful on how we do it and manage it, but there's a lot of different advice areas that we can chat through in the future.
Yeah. All right. We can jump to the last slide, Marco, which is going to be the Turkey tax break pack. This is probably the best deal that we've run so far this year. You're getting 5 of the machine we just gave away. This is a 1 petahash pack, getting over a petahash. The bundle price is going to be 17,500. You have guaranteed online prior to end of year. So if Mike mentioned the importance of being placed in service before December 31st. So that's something where if you purchase this pack, you're going to get priority activation to get those machines online. And there are several other benefits that are associated with this pack, but yeah, that's our current offer that's ending today. So if you want to get those machines set up, you can send an email to Nick is on this call, nick@simplemining.io. We always have, and you can also email sales@simplemining.io is the other email if you want to get those set up. And with that, somebody said, please share Mike's contact info. Mike Luna@simplemining.io. You have your LCL tax on as well.
Our website's lcltax.com. And actually, if you visit our website, you'll be able to reach out to our team. There's an info@lcltax.com email account, and it comes to me and a few other members on my team. 4 or 5 people in my office are all well-versed in Bitcoin. We've been doing this for quite some time now. So a lot of good experts in the office can help any one of you. So look forward to speaking with you guys soon.
Sweet. Well, we can jump. If you want to flip to the next slide, Marco, we got the Q&A. So if anybody has any questions, then we're going to start going through them. It looks like we got several in here. Maybe we'll touch on, somebody has this hypothetical question, Marco, probably in your wheelhouse. What if there were no buyer orders for hash rate on NiceHash?
Then I would buy with 90% discount all the available hash rate, and I will be making a lot of money. But yeah, it has never happened. It has never happened that there was no demand, because whenever there would be no buyers, there would definitely be at least one buyer that's willing to do arbitrage trading. And if there's one, then there's the second one who will outbid him, because buying at 90% discount means a lot, making a lot of money. But the second one will say, okay, I'm willing to buy it at 50% discount. Then the first one will have to outbid him again at 40%, and they will quickly be at around 2% discount on the FPS price, or 1%. So actually, the arbitrage traders are keeping the price floor for the hash rate, because they're the ones buying all of the available hash rate at, let's say, 1% under FPPS.
This one, Nick, if you want to answer this one, when will the S23 Hydros be available? Can people pre-order them now?
Yeah, appreciate it. Still working on that. We have a lot of hydro capacity coming online in 26. We have about 300 megawatts of planned capacity that we're hoping to bring online if all goes well in the 2026 and early 2027. So a lot of that, probably 90% of it, will be hydro. With it being winter, it's going to be very difficult for us to have large deployments here with the cold and whatnot. So a lot of our capacity will come online in the summer and fall. We'll have some sporadic 1 to 10 megawatt deployments sometime in Q1 likely, but we'll have more information as soon as we have it. So yeah, Billy, Mike, great job. Marco, awesome job today. NiceHash has been a partner of Simple Mining since I joined the company. I think Marco, we met right around when Simple Mining was born. So great group. Really excited, actually, Billy. I don't know if you mentioned on the webinar, but Marco, I know you spoke about kind of the hash. I have a dog barking in the background, so I apologize. But we do have a new program that we'll be rolling out here soon called the hash rate replacement program. We've been manually doing this. It's a very manual process where when customers have units go offline, we have to manually turn on our own hash rate for them, which you can imagine there's a lot of manual work involved in doing that. With NiceHash's help, we're in the process of developing a solution here soon that we'll have more information on, where when your machines go offline, we can actually redirect hash rate immediately from their pool to yours, even if we don't have the available machines on our racks. So really excited to roll that out here soon, and we'll have more information on that as well. But yeah, appreciate everybody tuning in, and Marco Billion.
Here's another one for you, Nick. Do the fan machines go out of service faster than the hydro machines?
Yeah, air cooled, is inherently going to have more issues because it's exposed to the elements more, right? Hydro is we don't have big exhaust fans and air moving through these containers to cool the machine. So the hydro is a more superior technology. It's not to say air cooled is bad, but you will see less DOA and DOA meaning dead on arrival, and less repairs on these machines with the hydro. The majority of the industry is air cooled, and it's also a lot cheaper to build air cooled. So the hydro technology is still evolving, and most companies haven't transitioned yet. So it's I think in the future you'll see mostly hydro moving forward. From like an O&M perspective, it's a lot more stable.
Somebody asked a question if there are any of the turkey tax break specials left. I am not sure off the top of my head what inventory looks like. Nick, do we have any of those left?
Yeah, we have if you email sales@simplemining.io, our team can assist. I think we have a few left. So.
Perfect. And then I think we had a tax one in here for where did Marco get the Euro DJ headset?
Amazon, right, Marco? Amazon. Most likely everything's from Amazon.
Yeah, probably. Yeah.
Let's see. We have a lot on the hydro versus air cooled. I want to find that tax one. There was a good, and you feel free. I don't know if is Matt still on here? Matt, if you see any good questions that you want to bring up, Marco, if you see, I'm just
if anybody has any questions, now's the time. Shoot them through in the chat.
I think there are a few in the Q&A section.
Yeah, I'm going through the Q&A right now.
There are some long-winded questions that require a little bit more in-depth analysis. That
somebody wants a tax consultation on the Zoom Q&A.
Yeah. Well, what's the situation?
There was a question about if NiceHash is available in the US for US users. Yes, of course, it is.
I'm one of them.
Yes.
So somebody asked a question about the 100 hours per calendar year requirement. So like obviously if we got started mining today, you're probably not going to hit the 100-hour requirement. That's okay. I mean, it doesn't matter. You're starting up a new business, you can work through that. It's not an issue in my opinion. Material participation is an area to be aware of. You've got passive activity, which is traditionally the rental property industry, and you've got active activity, which is mainly any other business. Can mining be looked at as passive? Yeah, certainly. We have to hit the hour requirements to show that we are actively participating in this business. So how that's done, I usually discuss that with clients on our consultation calls. But you're managing your equipment, staying on top of the fleet of miners, managing the Bitcoin, moving it from wallet to wallet throughout the year. Are we hitting 100 hours, and is nobody else doing more than us? Well, that's a gray area right there, because if Simple Mining has 3,000 machines in containers on a site, and they have 2 or 3 employees on that site, and we add up their hours of working, how much are they dedicating to your 50 machines? If we extrapolate that out, I still think the business owner is going to surpass them and do more hours than those employees on site. That's one of the biggest things that we have on our side to treat this as an active business. Some people don't need to treat it as an active business. They're okay with it being passive because maybe they have rental properties, and then they get to offset their passive rental profits with passive Bitcoin mining losses in the first year. So it's an area that you need to just be aware of. I put together a document that I've shared with many of you that are on this call today. And if you need one, you can certainly reach out. But it explains the rules around material participation. The key tests are the 500-hour rule. If you could get to that amount of hours, home run. 100 hours is obviously easier, but you are doing most of the work more than anybody else. So, everybody's situation is different, and we can certainly chat through on a private call.
Somebody says the tax benefits for forming an offshore entity.
I wouldn't even go down that route of getting into offshore entities. You can't escape the taxes because this is a U.S. based operation.
Mm.
If you live in a different country, that's a tax question we can't address today, unfortunately, because we work with.
Somebody said I live in Spain. What about the tax?
You got to ask your accountant over there. I can't address foreign and international taxes, unfortunately. We are a U.S. based accounting firm.
Yeah, this person had a good question. They've been mining with Simple Mining since April. They're using their LLC in Florida, but they don't know if they should have it registered in Iowa. He was planning to consult you in January 2026 to make some updates. They've been trying to get their LLC registered in Iowa before doing the taxes in January.
Yeah, I would still go to register this business and open it up in the state of Iowa. I said that earlier before when I was speaking, but yeah, you're going to want to register this business in Iowa. That's where the machines are operating out of. So it's a simple form. Iowa's Department of Revenue website you can easily find it. If you need the link, just email me and I'll send it right to you. But you can easily navigate through their website to find the form. You fill it out. Your business gets registered in Iowa. There's a difference between forming a business initially, because that's done at the state level, right? And then you can register that business in any other state where you are conducting operations out of. So just keep that in mind. You're not closing down Florida. Florida stays active. You still have obligations to file your SunBiz report to the state of Florida. But now we're going to open it up in Iowa as well. And you then have requirements in Iowa to file a tax return there, whether it's an S Corp return, a multi-partnership LLC, or a non-resident individual tax return if you're mining in a solo LLC.
Yeah. So the Spain person said that they don't have to pay tax in the U.S. Even if their machines are located.
You do. U.S. is going to tax. They're going to look for taxes to be paid on the income. So you definitely would want to file in the United States. But how that's done is a more complicated question and discussion that we would have to address.
Yeah. So I like this question right here. It said, what is the view on like mining and holding versus mining and selling? This person said selling Bitcoin as opposed to just continually stacking for the perpetuity of your mining investment. They also said like measuring your mining investment in Bitcoin terms, considering like you're making the bet that mining will allow you to accumulate a greater amount of Bitcoin over time versus just buying spot instead. And one of the key first thing I want to address is it's difficult to directly like a lot of people do the mine versus buy direct comparison. Like, oh, okay, today, if I were to buy the turkey pack, it's $17,500 and I get the miners versus buying $17,500 versus of Bitcoin on exchange. It's difficult to do that direct comparison because when you're buying spot Bitcoin, it's always after you've already paid taxes. So whatever, let's just say your income was $100,000 for the year, you get taxed 30%, then you're buying Bitcoin from the $70,000 versus if you're running your mining operation like a business, then you're purchasing the miners from a pre-tax. So you can purchase the miners at 100,000 and then they'll tax you after the fact. So that's one thing to consider. But also the easiest answer to like, should you mine and hold or should you mine and sell is just like, are you bullish on Bitcoin? Because if you mine and sell, you'll have less Bitcoin exposure. So if Bitcoin has a 5% compounding annual growth rate or compounding monthly growth rate, then you're selling, then you're going to lose exposure to that. So you'll just end up with less Bitcoin in the long term. So if you can retain as much Bitcoin exposure as you can over time, given you're bullish on Bitcoin, then you should, because it's going to perform well into the future. A lot of people are asking if this will be recorded. Yes, I will send out an email right after this. It should be as soon as I get the recording. Zoom will have to send me the link to the recording. I'll slice it up, package it so it looks good, easy to consume, and send over an email for anybody that was registered for this webinar. I'll send over that. I'll send over the tax course. I'll send over the modeling calculator for modeling the profitability of a mining investment. and maybe there are a few other things, but I'll make sure that everything is in there for you.
Jamie asks, if I wanted to move the depreciation to 2026 and I bought units in 2025, could my CPA use Form 3115? So Form 3115 is a change in how you handle the depreciation. So potentially, if they went live in 2025, the question on my side would be, why wouldn't you want to take the depreciation? So it's a discussion to be
Because
had.
their income, they're expecting their income to be higher in 2026.
Okay, so then the net operating loss rolls forward into 2026.
There you go.
Yeah, or you straight line it and you take it over, a 5-year period. So there's a couple options that you would have to work through with me on that one.
Billy, there's one for Marco here. I see Marco, you answered in the chat here, but should I use NiceHash or Ocean? And I think this is just more of a broader question that we can dive into is,
there's a lot of options.
Which pool is going to kind of be the most profitable, and how can people, Marco, I know we've had this conversation a lot, but I think you guys maybe have some trackers on viewing the profitability.
Yeah.
PPS
I'll
pool.
let Marco answer this question, but one of the things you have to be mindful about with Ocean is to run Ocean, you have to run a knots node, which does a lot of filtering. So up until this point, I don't really understand actually exactly how it works, how their profitability is similar to that of NiceHash and other FPPS pools if they're filtering out a lot of the transactions that are people trying to essentially mint NFTs on Bitcoin and ordinals and stuff like that. If they're filtering that out, you'd think that the payouts would be smaller. But from the data, it's not 100% up to date, but from the data I've seen, they've been relatively close. It hasn't been any major discrepancy. But the major difference is going to be Ocean has a lot of filtering for arbitrary non-monetary data that's included in blocks. Is they're gonna disclude that from any of the Ocean blocks, because the way that Ocean payouts work is you're only getting paid based on the blocks that you actually see one. You can go on mempool.space right now and go scroll through there and see all the blocks that Ocean Pool is winning, and they're paying out all of the miners that are pointing their hash to Ocean. They're paying out based on those blocks, based on their contribution. If you're a miner and you're contributing 100 petahash versus somebody contributing 1 petahash, then there's going to be different levels to how much they're getting paid, obviously. But you can provide your thoughts, Marco.
Yeah, so there's quite a few perspectives on this topic. The first one is, if we're looking just from the monetary perspective, what's the revenue from it? I would say that, I'm sure that NiceHash is still more profitable because you cannot cheat the blockchain, right? The blockchain gives out what it gives. You can only be slightly better than FPPS pools, which have their own issue. So Ocean is slightly better than FPS pools because they're using a datum reward system, which is essentially a PPLNS. So in the last period, how many blocks were found, what was your contribution, and how much of that you get back. Sorry, you wanted to say something, Mike?
We got about 5 minutes left.
Okay. Yeah, okay, I'm gonna hurry up. So as I said before, NiceHash is way more profitable. That's one perspective. The other perspective is with what kind of entities you as a company want to work with. Because if you're working with companies that can receive hash rate and send money to any country, even sanctioned ones, and I'm not talking especially about Ocean here, but pretty much every pool out there that's not doing KYC, you're also risking working with sanctioned countries, you know which countries those are. So yeah, that's one of the aspects that's maybe also to think about.
Yeah, in terms of because right now Ocean's non-KYC. Yeah, I would be skeptical as to what if there is ever some KYC requirement for, because they have to know who because if they are mining block, if you're contributing to blocks that is a sanctioned country and they have transactions in that block, then that's going to raise some compliance issue. Like if the United States were to say like, hey, you need to start like reporting on the transactions that are getting into your block. And it's kind of a terrible thing from a, like, I would say a lot of Bitcoiners are privacy oriented, is you're losing a lot of privacy that way, which is, I would presume, why a lot of people like Ocean is it has zero association with their identity. And that's one of the benefits that people like about mining is it's non-KYC. But I mean, it's somewhat of the world we live in from that perspective is like if a regulator were to come to Ocean and say like, hey, you have to start KYCing your clients, I'm not sure what they could do. I mean, they might have some loopholes where they say, actually, no, we don't. But the ideal situation would be like, from a mining pool perspective, would be similar to what NiceHash is doing, where it's a real time, it's just users that are trading the hash rate, and that's what is determining hash price. And there's no like intermediary that's controlling those payouts. It's just whatever the market is saying, this is the value of a hash, and this is what you'll get paid for pointing hash.
Yes, I always say that I challenge every CEO of any mining pool to say on their website that they welcome miners from sanctioned countries. Nobody's gonna do that.
Yeah.
Somebody asked if if I'm in New York and my machines are in New York, is there any way I could save taxes by filing my business in a different state? The answer is no. Your operations are in New York, so there's no point to forming a Delaware entity. Necessarily, you're going an extra step to maybe use Delaware business law, which could be good, but are you going public? Are you going to get sued in your mining business because there's a $400 a year franchise tax that you've got to deal with in the state of Delaware that might be annoying to have to deal with? New York State, the LLC fee is $25 a year, and it depends on total revenue, but it's a lot lower in the state of New York, and you're creating unnecessary obligations to keep it short.
Yeah, I like William. He asked this on the last one of the masterclass that we did last month on the simple mining swag. He wants some merch. We are currently working on making like we have a lot of good merch, hoodies and shirts and hats. We're working on getting something on the website where people can go on there and order stuff, but it's currently a work in progress. I like this one. We want to hit on this one really quick. Some mining farms are supporting high performance computing AI. And even if you are even switching from like, we can see a lot of the miners that are switching from like pure play Bitcoin mining to like running GPUs instead. What is the consensus? Like, is simple mining planning on doing a pivot into AI? Do clients have the ability to get exposure to that? I mean, Nick, you probably have some thoughts on this.
You're seeing a lot of the public miners chasing that, whether there's a true business case or it's for a press release. But I think you're going to see every data center moving forward have the option to be an AI data center. Simple mining is very much so focused on our core business, which is Bitcoin mining. The AI stuff is interesting. There's an overlap in, the energy side of things, but it is a very much so a different business, and there's only so many customers. I know we're running out of time here, Billy, but for simple mining, we're very focused on continuing to build out Bitcoin mining data centers. We have a lot in works for 26, and we're going to stay focused on what we do.
Yeah. Somebody asked how much time do they have to get in service before the end of the year? I would say sooner rather than later. I mean, you could potentially say like, hey, I want to get them out online on the 30th and get something from the marketplace, or then like it could work out for you. But if you wanted a certain model type, or if you wanted like this pack that we're offering, for example, then there's going to be shipping delays. And like at the end of the year, you just don't want, like, if you're heavily dependent on getting online before the end of the year, then you shouldn't wait, obviously, till the last day. So sooner rather than later would be the answer to that question. A lot of people are asking about what's the lowest cost offering that we have. And it's like, if you have a low budget, what's the type of miner to buy? I would say the marketplace is going to be your best option. That's going to be the lowest cost machine. I mean, in terms of what we have in stock, it's going to be down to around $3,000 to $4,000 to $5,000 for what we have in stock. And then there's going to be some lower stuff on the marketplace that's going to obviously have smaller margins. But if you did want to get like bare minimum exposure to all of the stuff that I discussed, and it would be going through the marketplace and it would be finding something that fits your budget there. And there's, I mean, yeah, there's a lot of really good questions in here. Maybe any of the good ones that I've seen here, I might include in the follow-up email, but maybe situation in
this one. I
Oh,
mean,
yeah.
we addressed. Can you briefly cover how mining rewards are income? So at the point that it hits your mining pool wallet, consider it income, regardless of whether you withdraw it. It doesn't matter. You've got control over that Bitcoin once it hits your wallet. Therefore, it's considered income. So just keep that in mind.
Billy, I think a good one. I don't know how much time we have left here, but Marco, maybe if you want to weigh in on this first, and we can go round table. But is the fact that China is the major manufacturer of ASIC miners a credible security threat or no?
I mean, I would say, yeah, issues with that.
Yes, it's an issue, of course, because everything goes down to the manufacturer, and we can still see that Bitmain, even though it's not public, they still own a lot of hash rate, even in the US. Who knows what else they own around the globe, right? Or if they don't own it, they have joint ventures, but still kind of having control over that hash rate. So yeah, I would say
Yeah.
it's a risk, but it would take a longer discussion to
Yeah.
go
Yeah.
through
It
it.
would be a long discussion. I would say one of the things that is optimistic is like companies like Proto, and I think Auradine is trying to get like chip fab in the US. Like that's kind of been the name of the game for a lot of stuff macroeconomic wise, is like getting onshoring production and manufacturing into the United States. And so we like don't have that logistics and supply chain bottleneck because we're full. I mean, for many things, cars, phones, ASIC miners, everything is TSMC in Taiwan. And so, and that's like why we're so adamantly defending and supporting Taiwan. But I would say that that's the direction that we're trying to move in, is getting a lot of this manufacturing and production to the US. And like Proto, Jack Dorsey's company, that has been their mission. I don't know when that's going to be go to market, and they're actually going to be standing up these foundries and starting to deliver these machines to customers in the United States. I can't tell you when that happens. I mean, I've been in communication with them, but there's no timeline. There's no ETA on that.
And even the big manufacturers, Bitmain, and I have to check on some of the other ones, but they are moving some manufacturing to the
Yeah.
US. So you're going to see a lot more here in the US. It's just inevitably going to take time. If you've ever been to China, I mean, it's going to be a long time before we're competing with China on a manufacturing level. So
Yeah. Well, I think we can wrap there. I appreciate everyone attending. We had a lot of people stay to the end, so appreciate your time. I'm going to send out an email recapping everything, all the information that you need from attending this. I will send it all to you. You can send me an email, billy@simplemining.io. If you have any questions, you can email Nick@simplemining.io, sales@simplemining.io. You can email Marco. Marco, what's a good email for them to, you can drop that in the chat.
It's marco.tarman@nicehash.com. I'm gonna drop it, yes.
Yeah. And yeah, I wishing everybody has a happy holidays, and thank you for attending, and until the next one.
Thanks for attending, guys. Bye for now.
Thank you. Thank you. Bye.